Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Ben Schiller, managing editor of features and opinion at CoinDesk, as well as Jason Guthrie, head of digital asset product at WisdomTree. We're here to discuss why bringing traditional assets into the digital ecosystem will allow for blockchain technology to be used in a more mainstream capacity. It is great to have the both of you with us. Welcome to TradeTalks, and before we get into that, Ben, let's talk about some of the narratives that you're looking at within the digital asset space heading into the fall, because it's been somewhat muted over the past month or so.
Yeah, it's definitely been a quiet few months, and I think we're looking for the next kind of narrative to drive the market, whether that's up or down, whether that's interest rates, macro conditions, or obviously a lot of regulatory issues in crypto, digital assets these days, so that could maybe push the market. But I'm interested in what Jason has to say about this. What do you think's driving the market?
Yeah, it's obviously, as you guys say, it's been a bit of a muted period. I think the narrative around kind of a couple of big pools of crypto getting sold, Mt. Gox, Germany, some of the stuff out of the US government has kind of passed, and now we're kind of, as you say, looking to see what drives it next. Tokenization has definitely been kind of a massive trend, but it's, I think, more of a slow burn as we talk about like established markets and use cases coming into the infrastructure, whereas the market's very used to chasing like what's that next big innovation. Is it DeFi, is it yield farming, is it NFTs, whatever it might be. So we've definitely been lacking one of those, but I do think this longer term narratives around how do we better use this technology is kind of more constructive to growing the space, so it's interesting. And
it's a good point that you bring up about being constructive. I would imagine that a longer term look within this space is going to be more attractive to institutional investors anyway. It shows that market structure is maturing and that we are having a conversation around frameworks and so forth. I mean, it's part of the national conversation right now.
No, definitely. And I think, you know, this flash in the pan, what's going to stick narratives we've seen in the past aren't, you know, it's not a good environment to get institutions, traditional players, people in the regulated space to take it seriously. So I think it's good to see that we're starting to get past that. That's not to say, you know, all the innovation is done. I think we will see, you know, wonderful things that we haven't thought of before coming out of the space. Organic innovation kind of driving more efficient markets, I think, is what's so exciting about, you know, DeFi, blockchain native financial services. But we're definitely seeing, you know, mainstream use cases starting to get real traction, which is great.
Yeah, and Ben, what excites you about investing in digital assets these days? Are there any categories you expect to be active moving forward?
Yeah, well, I've been covering crypto for about 10 years, and people have been talking about tokenization and real world assets coming on chain for a long, long time, and it's only really in this cycle that it's really happening. And I think the whole ETF discussion, you know, the approval of Bitcoin ETFs really solidified or legitimized digital assets amongst mainstream institutions, and I think that's feeding through with what we're seeing with tokenization now. I'm interested with what Jason has to say about the future of tokenization, whether that will be in treasuries or other types of mainstream assets, or whether it will be more on the ground assets. What do you think are the next categories are going to be tokenized?
Well, so I think taking a little step back, I think the overarching trend that we see is that, or the value proposition kind of more specifically, is that once, you know, people, institutions start doing business on chain, they understand the value prop, that it can be done instantly, that you aren't waiting for funds to clear. Like the connective tissue that blockchain enables is massive, right? So I think why we've seen traction for like money market funds, short-term treasuries, that's been the big kind of real-world growth asset in this cycle, has been because of the macro environment. Interest rates are high. This means resting cash, the growth in stable coins that really is yielding nothing. There's been a very discrete value prop to allow them to get the return, 5%, on cash at rest without having to offboard from the digital asset space. So I think that trend is going to grow and, you know, reach more people, more institutions. Which asset class they're going to want next, I believe, is likely to fall into kind of the similar macro asset rotation cycle we see in the traditional space today. So they want money market funds today because interest rates are high. If we start to see cuts, like, are we going to move into, you know, is this going to be because of recession fears and they go towards safe havens, in which case maybe we see an increase in kind of gold commodities that come onto the space? Or is it going to be more of a risk-on environment and we're going to see rotations into longer-dated bonds or equities? I don't want to predict the way that goes, but I think the industry is really positioning itself to respond to the demand, which again is really healthy for growth.
Yeah, and Ben, it's interesting, when we were covering Consensus this year, of course, by CoinDesk, one of the key interviews that stood out to me was she had mentioned, one of our guests had mentioned that we need to be nimble like a startup, but we need to think about scaling as a technology company, and it's all about user experience. And there was a few key themes, but one of the key themes that nearly every guest came on was about user experience, because that's how you're going to bring the institutions on.
Right. I mean, this is a long-running issue in crypto. The criticism has always been that this is crypto for crypto people. It's not a mainstream something that you would expect on a modern app technology, and people are not using it in the same way they are more traditional technology. So I mean, I think that's still an issue for the digital assets industry, and until it really solves that problem, it's not going to see mainstream adoption.
Yeah, but however, though, CoinDesk reported 350 million in Bitcoin options were linked to November's election. So traders and investors, they're thinking about it from a traditional hedging or perhaps taking a directional bet.
Right. I mean, I think the political conversation has been really good for crypto because it's definitely brought it into the mainstream. I mean, Donald Trump standing up at Nashville at the Bitcoin conference, basically staking claim to being the Bitcoin candidate, again, sort of legitimizes this industry and makes it a mainstream investing proposition.
Yeah, I think in those two things you do need to separate out like the technology from the asset class that it's created, right? So, people, the financialization of Bitcoin and the options market and the link to the politics is a really interesting trend, and that does help to mainstream it in people's minds. Definitely as an investment class that more and more can sit next to traditional, and more people are putting in their portfolio, which is a great piece. The second part, which I think speaks more to the user experience element, is how can we get this out to more people? How can we use the technology? And this is definitely a big thing for tokenization, right? I think blockchain as a technology really is more like infrastructure. It should be underpinning these things, not be the primary reason that you show up. People show up because it's an order of magnitude better user experience than what they get today. Money market funds, again, these are the ones that are in vogue. It's not like you can't get them in the traditional space, but people like the user experience of doing it in tokens. The more that we can normalize that, make it accessible, make it integratable into people's workflows, the more people we're going to be able to attract to, so they can reap the benefit of that underlying infrastructure without having to be an expert in it.
And that's what institutions want. They want transparency, they want liquidity, they want to be able to standardize it.
Absolutely.
It's not necessarily how you got from the engineering, the developing to the user experience. They just want it to work.
Right.
And to be seamless.
Yeah, exactly. They want it to be plug and play. Like a big, we can see parallels in the financial services. Historically, the huge growth of fixed income ETFs was because that asset class was notoriously difficult to access, but once we wrapped it in an ETF wrapper, it fit into the equities markets, infrastructure, into the trading model, into the controls, the reporting. So that standardization was massive. Tokenization, we're now talking about the possibility to standardize on an internet scale, not just a single country market scale. And I think that's going to be one of the massive drivers of why this can get to scale that we haven't seen previously.
Yeah, and I think the ETFs were a great use case because it's a wrapper that institutions, retail investors, advisors are familiar with, and I think that was really a key milestone. But in my mind as well, Ben, getting a framework and talking about it in the national and global conversation, that's key. Because that's when you start to think about even more product innovation, to your point, and it starts to look more like a traditional institutional environment.
Absolutely. I mean, the Bitcoin approvals in January by the SEC were a catalyst for this whole cycle that we're seeing right now. It was followed obviously by the Ethereum approval, and a lot of people think that a Solana approval might be coming down the road. We've already seen a number of jurisdictions around the world approve Solana ETFs, so that's maybe the next one the penny to drop. I don't know what Jason thinks about that.
To ask.
Obviously, there's a regulatory and filing component, and I'm not going to comment on anything the SEC may or may not do. But I do think demand for the asset class is growing, and I think the point you make is a completely valid one, that this is really helping to mainstream not just the asset class, but the technology in people's minds. It's two sides of the same coin when we talk about tokenization versus like crypto as an asset class and the growing investor demand. That general comfort is hugely supportive in each direction. It really is sort of a self-propagating mechanism, so it's absolutely great to see, and I think we will see more. If we look at what's happened globally, like most of the interest to date has been pretty concentrated in the big two, Ethereum and Bitcoin. Europe's got a much more established sort of, crypto product marketplace, but, I think it will continue to grow over time. I think the question is, what's the tipping point between people wanting this in a wrapper in the old rails versus coming to look for it natively in the new one? and how much product we get in the intervening period. But it's going to be an interesting time.
Well, it's interesting because the panel before you guys was with traditional asset managers. I mean, you know, talking about the top 5 here. And when we were talking about how the innovation in ETFs and indexing is impacting product rollout, everything was about, it's not just fixed income and equities. There is a demand for alternative investments, and one of them being digital assets. And you're hearing that from investors, advisors, retail investors. So not even just because it's a 60-40 model, we can argue that all day long, but looking for an asset class that perhaps isn't correlating as much to the market. So the demand is there.
Oh, definitely.
Yeah.
Like, absolutely. And we've seen people slowly adding this kind of over the years. It was 1%, now people thinking more like 2 in terms of like the crypto you could get into that traditional portfolio. And I think that's going to increase as, you know, people understand it better, as volatility, you know, over the long term starts to come down. It's definitely in the mainstream, it's in the zeitgeist of investors now.
Yeah.
I mean, I think what's happening really is like, you know, there was obviously this division between crypto or digital assets and like mainstream finance. And I think what we're slowly seeing is the kind of combination of the two. And I think in 5 years' time, I don't think we'll be talking about digital assets or crypto being a kind of separate category, because when everything is on chain, it's tokenized, then you know, what is a crypto and what is a traditional asset, it'll all be the same, you know.
Right, well, and that's even understanding Bitcoin versus an Ethereum spot ETF. One is store of value, the other one is actually the underlying infrastructure. So it's almost like investing in finance or investing in the tech sector. And I think when you that is just part of educating within the industry and investors and institutions. It's two separate things in a way. You know, you're investing either in finance or you're investing in the underlying infrastructure. So when you think about these other alternatives to Bitcoin and Ethereum, I think you're going to start to see those bucketed out when you think about thematics.
I think that's possible, yeah.
Yeah.
I think.
Yeah. I mean, that's an important distinction to make.
No, I think the nature of the use case, how value gets accrued, like what's the, like again, what's the value prop? Why would you, you know, what's the utility it's meant to drive toward the end investors, I think is really important. We've seen a lot of proliferation, I think a lot of buzzwords put around the business models, around the tokenomics that various projects, protocols have put out into the market. We're going to need to see, you know, what the prevailing business models that emerge from this space are. Some of that will accrue value to the chain, some of it will accrue to the companies that build on top of it. It is an interesting dynamic that's a little distinct from what we've seen kind of in previous cycles, but we're going to have to go through sort of a process of creative destruction in this space, like what we saw in, you know, the internet in the 90s. You go through a lot of pets.com to find Amazon.
That is a very good point. All right, appreciate both of your insights. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.